So the market's in kind of a weird spot right now. It seems like it's shifting a little bit. Can you tell me a little bit about what you're seeing with rates right now and if you think those are shifting or what's going on?
Yeah, I think definitely we've seen rates starting on a downward trend, especially today. Today would be December the 11th. Fed met today and actually have lowered rates again. So we're starting to see rates lower. We're starting to see a period of what's called quantitative easing, where the Fed actually goes in and buys bonds. So we might see rates dip even more going into next year. So rates historically have been as high as 18 and as low as 3. So rates right now in the lower sixes, it's a good place for rates to be. But we've seen them drop from about 7.5 about 18 months ago, 12 months ago, and now we're getting into the lower sixes. So we're definitely seeing rates become more attractive. Moving into a buyer's market, which is exciting for anybody who's looking to buy. Now is a great time to buy.
Yeah, and I know I've got a couple first-time home buyers that are really excited about what's going on right now. I've got three that are, going into contract here soon, and I've got two that I just finished up at the end of the
You're
last
seeing
summer. So
prices level off where before it was very hard to get into contract. So now you're seeing prices level off and in some places even decrease a little bit. But more importantly, you're seeing seller concessions come back where you can ask for seller paid closing costs or you can work with an FHA loan rather than just a conventional loan. For a long time, you really had to be a conventional buyer, not asking for any closing cost, willing to pay above what the house might appraise for, or to pay an appraisal gap where you're willing to pay for a house even if it doesn't appraise. Those kind of things are going away, or at least easing off, where buyers now have a really good shot at a house. So affordability is coming back into the housing market, which is a great thing in 2026.
right, and I think something that I addressed a couple months ago too is, with us being in a little bit of a weird spot or being in a shift rather in the market currently, even for people who are getting into new builds as a first-time home buyer, they're still able to take advantage of a lot of those incentives that were given out to make it look a lot more appealing to first-time home buyers where they weren't able to secure lower rates initially, or they're giving out things like tax
Absolutely.
abatements.
Absolutely. New builds are a wonderful way to get a low interest rate. The builders will build in points so that their mortgage company is the best rate in town, and it can be by quite a bit. So a new build is a wonderful way to get a great rate. Depending on the area, there's areas such as Bell Fountain where they're offering real solid
Yeah, 100%.
tax abatements for new builds. So if you're looking for a great deal on a brand new house, you'll pay more for the house because they don't build cheaper homes, but you'll get great financing incentives and possibly tax abatements. So new builds can be a great way to go. And just a quick plug, a lot of people don't realize when you buy a house, when you buy a new build, you can have an agent. You need to have a realtor when you buy a new build, and Michael can certainly do that. It's a wonderful thing that people don't realize that you can be represented, and when you go in without representation, it's almost like going into court without a lawyer. So if
Yeah.
you're looking to build a house, talk to Michael, talk to a realtor, and let them represent you, and you'll make sure that you have the best representation you can and get the best deal you can.
Yeah, and on the forefront, I do a lot of work with my clients, talking to representatives of these new build companies and such, and you can see that on my social media. But on the back end of that as well, I spend a lot of my time making sure that I like the representatives that I'm working with, instead of just walking into a model home and finding the first person that is there and talking to them about it. I really want to make sure that I work with somebody who knows the ins and outs of the builder, and somebody who can express all of the options and the
Well, and
home
using
warranties and things that are really important for that home security.
and using that realtor insight, even when it comes to choosing options, options that are going to add value to the house rather than things that aren't, or having a representative who's going to actually look at the inspections and make sure that those inspection periods are going well,
Yeah, absolutely.
and to give people some teeth and some representation, somebody on their side rather than just the sales rep. Not that there's anything wrong with any of the sales reps or anything, but having your representation can make a big difference in the build process.
Yeah, especially working in the business, I know the questions to ask,
Yeah.
on behalf of the buyers, because sometimes you can go into those situations and you can be fed all this information. It can seem like a lot. It's hard to keep it organized for yourself if you don't have somebody who knows what to look for and how to be educated correctly to make the right decisions in your
Yeah.
real estate journey.
Yeah. Well, and also I think about 2026, enough can't be said about it becoming a more level playing field for everybody. So over the last 3 to 4 years, it's been harder to buy a house. It's been such a seller's market that now with I mean, they raised interest rates for a reason. They raised interest rates to slow the housing market because prices were going up too fast.
Right.
And now we're seeing those level off and even come down, and like I said, in some places. But more importantly, buyers are able to get buyers incentives to buy houses.
Yeah.
Home warranties, or being able to ask for seller paid closing costs, different things like that that really make it more attractive to buy or more possible for a first time home buyer to buy. So I'm excited for 2026. I think
Yeah,
it's going
me
to be
too.
a great year.
It will. It will be a great year. Okay, so let's talk a little bit about special financing and loan options.
Sure.
Just kind of the whole bubble. Current success story. I have a client who is in contract with an FHA loan, and we did what you call a power bid. So,
Yeah.
can you tell us a little bit about your special financing that you're seeing
Well,
with first-time home buyers?
what we do is a power bid pre-approval here at Guaranteed Rate Affinity, where we actually provide an underwritten pre-approval. We have the underwriter look at the pre-approval and approve it all the way through. So basically, when you make an offer, you know that that loan is going to be approved. What we were able to do with one of Michael's clients was to firm up the income. So we're not shooting in the dark, and we were able to maximize the amount of income we were counting, structure the deal to get them in the price range where they wanted to be at. We were able to successfully get them into contract last week with an FHA loan, not a huge down payment, and we're securing seller paid closing costs. So it's a good thing.
Yeah, yeah, and I think there's a lot of stigma around the market right now, just because it was so hard to get a house for so long. Like you said, people were paying way over list price just to secure that home. But now we're in a case scenario where people are more likely to accept those FHA loans in contract.
Exactly.
And it's
So
getting easier.
it's to elaborate on that a little bit, what's getting easier is to buy a house with less money down, with
Yeah.
the seller contributing towards closing costs. That's always been one of the barriers to home ownership, is that down payment amount. The FHA process will allow you to put 3.5% down, or if you do a USDA loan, no money down. There's grants available if people need help with down payment. But asking the seller to pay your closing costs can save you $5,000 to $6,000. Now, for somebody in their 50s buying their third house, they've built up equity for 30 years. That doesn't mean anything. But when you're trying to get into that market, just married or just out of college, just entering the workforce in your mid-20s, late 20s, that's a lot of money. And being able to have the seller pay that for you and working that into the deal can be the difference between whether you can buy or whether you can't buy. And that's what was so frustrating for so many people over the last 3 to 4 years. It really priced out first-time buyers. You had people who were willing to pay over list. People were willing to pay over the appraised amount. And now those options are going to be there for different loan styles. So you'll have FHA that requires less of a down payment. If you're looking in the Marysville area, outside of town, outside of Marysville proper, USDA loans are out there with no money down that can be available for you. With seller paid closing costs and no money down, I closed on a loan last week where the buyer brought zero
Really?
to the closing. They paid an appraisal fee up front. They got that back. So they literally had nothing into the transaction.
That's awesome.
And that was on a $230,000 house, not in Marysville, but in Union County, might have been Champaign County. But if you can get out of the metro, there's going to be options out there for no money down. We have FHA down payment assistance that we can work with for no money down. Now, it results in a higher rate. So if you have down payment money available, you're always better off to use it. But there are options out there for no money down loans. I had a couple over the summer that were literally no money down, no money due at closing. Everything they put into it from the financing aspect, they got back. So those are going to be out there more than they had been over the last couple of years. Like I said, 2026 is going to be a great year to buy.
Yeah, that's fantastic.
Yeah.
What are the biggest credit or money mistakes that you're seeing keeping a lot of first-time home buyers from being approved immediately for the loans that they're looking to get?
Absolutely. That's a wonderful question. Well, the biggest mistake that I see right now, we are in an economy where cars are expensive.
Yeah,
And I'm seeing people that have car payments that keep them from buying houses.
yeah,
I see that more now than I've seen in my entire career, where you're seeing people coming in their 20s with a $600 a month car payment. It makes it very difficult to buy a house when you're at a car payment at that level. Now, that used to be somebody went out and bought a Mercedes, but now that's just somebody going out and buying a normal car.
don't buy new.
Cars are very expensive. If you want to buy a home and you're younger, buy a cheaper car. Find something less expensive. There's deals out there on cars. Myself personally, I'm in a position where I may need a new car and I don't want a big payment. So I'm looking at something that has, 50,000 miles on it. That was a less expensive car to begin with. But that's the biggest mistake that I see are people, younger people especially if they combine that new car with a motorcycle or something like that, then you can very easily price yourself out of being able to buy a house, or at least the house in the price range that you want to be at. As a homeowner, you make decisions whether you want to have that shiny new car in the driveway or whether you want to own your own home. So think about that if you're going to buy a house in the next 5 years, think, do I need that Ford F-150, or can I get by with something that's going to be less expensive? That's one of the big mistakes that I see people making when it comes to buying houses or setting up themselves with that future is having the toys or having the more expensive car rather than owning your own home.
Yeah.
Over your lifetime, you'll be so glad you chose the house over the car. A home is an appreciating asset. There's very few things you can buy in this world that are going to appreciate in value. Cars are not one of them.
Right. Yeah.
So that's one of the big mistakes that I see people make, and they're often surprised at the home they can be approved for, but it's because they have a $600 a month car payment. And that's not to say it's difficult to get to that level for a car payment. If you're buying a new car, new mid-level car, that's kind of the payment that you're looking at. Just keep in mind that's a lot of your income that goes out the door.
Yeah, absolutely.
Yeah. The other mistake that I see people make, younger people, not realizing the ramifications of credit. A lot of times I know young people, you can get something in the mail from, say, a doctor for a doctor bill, and you're not thinking much of it, but without realizing how catastrophic that could be for your credit if you don't pay those bills. Credit cards, making sure that you don't extend yourself too far into a credit card, keeping yourself at 30% of the limit or less. Believe it or not, credit cards are okay for your credit. That's the way you build your credit. But don't charge above 30% of the limit. You're better off to get another credit card and have more credit using less of it. A lot of people don't realize that you're better off to have 10 credit cards and owe 30% of the limit on all 10 than you are to have one credit card that's maxed out.
Right.
You want to keep in mind the ratio between what you can borrow and what you actually have is the biggest thing that hits your credit score.
Right. Yeah.
So those are kind of the mistakes that I see people make when it comes to getting qualified to purchase a house.
Yeah, and I can get into the conversation of debt to income ratio, but with a lot of people, but not a whole lot of people have the education of the debt to credit ratio and how important that really is.
That's right, and it's counterintuitive because you would think, well, I only have one credit card. Yeah, but it's maxed out.
Right.
So what you've told the bank is, we've given you this amount of credit and you've used all of it. When you're better off to say, oh, well, I'm getting to 50% of this one credit card, I need to open another one so that I can spread that out. And that shows the bank the responsible use of credit. It's counterintuitive. But getting too deep into your credit cards or maxing them out is a big mistake that I see people making as far as their credit score goes. When you're better off to open up another account and spread that a little further along.
Absolutely.
Another big mistake that I see people with their first time buying a house, realistic expectations. Understanding that you're better off to get into a house that you can easily afford as your first home. And understanding that your dream home might be house number 3 than trying to get it all at once.
Yep.
Getting into something, building up equity, is better than renting. And you don't, it doesn't have to be your dream house. Your first house could be a $150,000 house that's in East Liberty, or something in Bellefontaine that's cheaper, the Kenton area, something like that, where you're getting into a home and starting to build equity rather than trying to do that new build as your first house. Understanding that when you rent, you pay a mortgage. You're paying your landlord's mortgage. You need to be paying your own. So have realistic expectations on what your first house is going to look like. It needs to be better than that rental. And then your next house is going to be better than the first house. Your third house is probably where you get your dream home when you're about 40. You know, and that's when you get the outbuildings and the acreage and the things that you might want, but getting into the game and building that equity. I bought my first house in 1996, I believe, for $88,000. Sold it in 2003 for $135,000.
Wow.
Now, the second house I bought, I didn't do that great on. It was different, but I still had that equity from house number one that I made
it doesn't go away.
That carried into house number two. House number two I sold pretty much for what I paid for it, but I still had that equity from house number one and got house number three. So getting into the game and buying a house early, something that's affordable for you, needs to be better than where you're at now, but don't think you have to get everything on that first house. You just need to get in there and start building wealth. Home ownership in the United States is the number one wealth builder in our country.
Absolutely.
Is home ownership.
Yeah, and something that I talk about with my clients too is, you know, the difference between just building equity and sweat equity. A lot of people my age and people who I talk to that are first-time home buyers think, you know, if I want to get into this, oh, well, I can't afford something that's, you know, crazy nice, like you said, third house, dream house, you know, work towards it. But you don't need to necessarily get something, especially if you don't have the experience. You don't need to get something that's, you know, a fixer-upper that you need to put a bunch of sweat equity into to you know, double the amount of value that you get out of the house by the time you sell it.
That's right. One of the mistakes that I see people making is maybe over-improving their house.
Absolutely.
You know, getting a $150,000 house and for some reason putting in granite countertops.
Right, because what's the expense versus the return on that?
You don't need to do that. You want to make sure that the improvements you make to your house are comparable to the rest of the neighborhood. You don't want to be the nicest house in the neighborhood. The smartest person has the crummiest house in the neighborhood. All the other houses are pulling his value up. Whereas if you have the nicest house in the neighborhood, all these houses are pulling your value down.
Right.
In other words, don't over-improve. Don't make improvements that you're not going to get the value out of. If you, let's say you blow out a basement and do a really nice finished basement, you need to do that because you want it. Because it's for you. Because you're never going to get the value back out of that. Because it's just not something that adds value. Putting in an in-ground swimming pool in Ohio doesn't add value to the house. Because not everybody wants that. So making sure the improvements that you put in are comparable to the neighborhood. I saw a wonderful thing on TV the other night about a guy who flips houses, was talking about paneling. And talking about why he would never take out the paneling in a house he's going to flip. Because it's going to appraise the same as the house with the drywall.
Really?
Absolutely. Because it's all based on square footage. It's not there's no column that says paneling where the appraiser says 5,000 off because this house has paneling. Just keep that in mind when you're looking to buy a house, looking to do improvements to a home. One of the things that I'm most impressed about, I've been in this business now for 30 years. I've been able to tell when people have what it takes to do this business and people that don't. Michael has that in spades. What it is it's the willingness to get in there, the willingness to try, to be creative, to work at it every day, to think about not only how is this going to be good for me, how is this going to be good for my clients, how is this going to be good for the people that I work with. It's a spirit that people have of helpfulness, and you can tell that, and that's why I'm excited to work with Michael to help in any way that I can, because I know that he's going to be successful at this business because he's willing to work at it every single day. He represents his clients with their best interest in mind, not just looking to make a buck for himself. And he's looking at the long game. How do I make this a career? If I'm excited for you. And I'm excited too. I'm excited for the people in your age group to have this kind of representation.
Thank you. I'm very grateful to have somebody like you on my side too, because you've been in the business for
a long time.
And
I know that you're going to do really well at this because I see your passion for it. And even doing these kind of things, sitting down, making videos, about things that are educational to put out there, it just shows who you are and how far you're going to go in this business. So I'm excited for you. I highly recommend anybody use you, especially people in your demographic and age group. You're going to be just a fabulous resource for all of your peers, and even older folks who are looking for somebody who's excited about this, and does it out of a passion for real estate. I mean, you do real estate 24 hours a day, and you're in everything you do, what you do to make money
Right.
is all around real estate.
Yep.
And you're constantly educating yourself on what properties are worth, all of that kind of thing. So it really ties together. So I'm very excited for you. I think you'll be one of the major agents within about 5 years, I would say.
Well, thank you. I appreciate it. It's been a pleasure.
Yeah.